In this video, we'll discuss the stocks of SOfi STock BKKD and NIO. We'll also study a number of publications to offer you the most recent information on these businesses and their price objectives. This will prove to be more of a bearish, negative post that investors must be mindful of. So I'll add my own perspective to level the playing field. We'll continue by studying an article on SOfi STock titled SOfi STock, However Momentum May Not Last Long. We'll look at an optimistic, upbeat article where the writer speculates that SOFIs may see a short squeeze, which would drive up the price of their stock as a whole. Welcome to our channel, Finance Experts. Let's dive in. Let's start our discussion. We will review the most recent news on it and determine the validity if that analysis is true. Once we have examined BKKD stock, we'll discuss just how much they plan to contribute to the Piper Sandler International Exchange and FinTech Conference. Naturally, we'll also discuss their most recent price objectives, price forecasts, and general news updates. Finally, we'll discuss the NIO stock ticker symbol NIO in relation to their May delivery figures and how that could or might not have an effect on the share price as a whole. As you're already aware, SOfi Technologies is a fintech firm or financial technology company that provides its users with an all-inclusive digital app. This firm essentially functions as a digital bank, and during the past several months, the price of its stock has skyrocketed. This is mostly because of an impending event, like the debt ceiling, as well as the general fundamentals of this firm as they get closer to profitability. Nevertheless, the author of this article thinks that the macroeconomic climate will deteriorate before improving, which might have a negative effect on the share price of SOfi Technologies. When it comes to broadening their total revenue streams, which they have done a fantastic job at, SOfi is also focusing on this. As we shall describe, SOfi Technologies are predicted to attain sustainability by the end of the year, or maybe even before. Yet, the author additionally thinks that the firm is missing almost all significant earnings catalysts, most likely profitability. Therefore, let's move on to a more optimistic analyst who thinks that SOfi stock may potentially see a short crush. SOfi is currently selling at $6.90, but very bearish experts think it is only worth $2.50. And more positive analysts think it might rise to $10. Let's examine this article in more detail and talk about why the author thinks they will short compress. Since then, the shares have increased by almost 40%. So I really hope everyone is collecting gains. If you have a negative view of this firm due to the market's high volatility and potential for a decline, GAAP profitability will be a significant milestone for this business. And typically a few months after a company accomplishes profitability, the price of its shares really begins to appreciate. The author is predicting the exact same thing, predicting a significant valuation upswing in terms of the market cap. BKKD. More encouraging is that their revenue reports will improve steadily as they approach a gap in profitability. Although I would not classify this firm as being severely shorted, the author clearly emphasizes that it is. They are only a modestly shorted business with an 11% short interest. A brief squeeze is more likely to occur the greater this proportion is, as opposed to the author, who thinks the corporation will short squeeze. I do not feel that will be the case if I short squeeze. Given the lengths of time they have to cover their total short positions, I genuinely don't believe there is enough short-term interest to send the entire share price over the roof. Therefore, although I do believe that this is slightly overstated, we can look towards GAAP profitability, which is going to act as an incredible catalyst. If you own shares in these companies, you should prepare for a number of catalysts that will likely occur between now and the end of the year. Let's discuss BKKD. The fact that this business is effectively a penny stock has many people thrilled. Right now, it's really affordable, and they predict that the Piper Sandler Conference on June 8th will significantly increase the general share price of this firm. Even $30 has been suggested as a price objective by others. Additionally, there are no notable sources, supporters, institutions, or five-star experts that have set a price objective of $30. A more reasonable price target might be a high of $2.10 instead. Analysts that are negative predict that this firm might lose as much as 50 cents. However, let's really speak a little more about what this firm does and why people are so enthusiastic about it, given that its potential to go from $1.45 to purportedly $30 has people so happy. As of today, the recently supported holdings with the ticker symbol BACT will attend the Piper Sandler Global Exchange as well as the FinTech Conference. The only information we are provided by this article and many others is that they will only participate in this conference with a fireside chat, which you may access or listen to by visiting this website on display. This business was established in 2018 and creates technology that links with business. In essence, they provide API solutions and software as a service that unleashes crypto and builds loyalty, which fuels performance and involvement. Therefore, based on my existing position on the stock, I believe it would be far too hazardous to invest in this business because, as of yet, they have not fundamentally established themselves. Let's discuss the NIO stock and why it has lately outperformed the overall market as a result of their May delivery updates. In May 2023, the firm delivered roughly 6,000 vehicles. And the best part is that they began their all-new ES6 shipments in late 2023. In simple terms, we want to get over the third earnings release for NIO because after that, we could hear excellent news. However, it might not be as positive for investors for the Q2 earnings release. To now in 2023, NIO has supplied 43,854 automobiles annually, representing a 15.8% growth year-over-year, which is less competitive than many of its closest competitors, particularly Tesla, given that NIO is a maker of electric cars. However, as of May 31st, cumulative deliveries of NIO's cars totaled 333,410, which has investors happy since after Q3 is across, it is projected that NIO will significantly boost their entire production capacity. Despite this, the firm is presently trading at roughly $7. The general agreement among experts and professionals is that this firm is highly recommended, even as they near the company's next earnings announcement on June 9. Analysts on Wall Street have a bullish view on NIO. It's pretty bad that the firm is anticipated to announce profits per share of a loss of 22 cents, down 22.22%. Once more, we wish to get past this quarter's third earnings report as well as this one. Then, this business is expected to grow. Therefore, it would be wise to postpone investing in this firm until then, because shares might decline. Lower than $7 on the other side, their revenues did rise by an estimated 8.22%. or $1.69 billion. But it was only for the quarter and not for the entire year. According to Zox consensus forecasts, the company would report sales of $12.04 billion and EPS of a loss of $1.39 per share. It would imply a gain of 65.98 instead of a loss of 7.75. You can see from their income that they are beginning to scale up both the entire amount of production and their capacity to provide and sell these automobiles. Although the firm is now a long way from profitability, current measures, predictions, and forecasts indicate that this might change by 2026 or perhaps sooner. In general, if you are a risky shareholder, you might additionally wait until after this quarterly report and after the subsequent earnings report. According to this firm, if you are a really risk-averse investor, you might want to hold off on making an investment until the firm is close to being profitable. However, in general, it appears that in the long run, if you want to keep in this business for a decade or two, you might experience again turning a profit with this business, depending on your level of comfort with risk, as well as how long you intend to retain this firm. All right. This is the end of this video. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comments section. Let's meet again with another useful video.